brace yourself. News today that Google and Fiat Chrysler are teaming up, forming an alliance that hopes to bring self-driving vehicles to market by the end of the decade. Some deadline. All right, here to tell us if we should be more worried about faulty airbags or autonomous driving is John Stoll. He's the Wall Street Journal's Detroit bureau chief. Kind of a tongue-in-cheek first question there, John. Welcome to you. Let's begin with Takata airbags, because this is serious stuff. I mean, we can't believe these numbers are staggering, and the risk there and the deaths they've already caused is just jaw-dropping. Where are we in this?
Yeah, I mean, I don't think we're over the finish line by any stretch of the imagination in terms of the auto industry's exposure to the specific technology that was used in the inflators that now, obviously the regulators are expanding the amount of callbacks. I mean, the real question is going to be whether or not you can actually get all these vehicles off the road and at the same time get them fixed with enough replacement parts over the long term. So it's a challenge for regulators. Just as, I mean, Takata is one company that is limited in its finances. The question of whether or not they can even afford this without some kind of outside intervention is one question. The other one is, can there be a coordinated effort to get these cars off the road? I mean, you mentioned that we're at 11 deaths have been affiliated with this problem, and that number's gradually creeped up over the last couple of years.
What's going on with the technology of these airbags, even if it's not Takata making them, which sounds very unlikely here going forward? Age, moisture, temperature, that's what the investigators are pointing to. This has been the ongoing problem. Has there been work done to improve the technology and safety of the airbags, which are supposed to be the #1 safety feature in vehicles?
Yeah, well, going forward, they believe that they've effectively taken off the market the type of technologies that lead to these vulnerabilities with the humidity. But by no means we continue to see this kind of ripple effect that the longer that this thing stretches on, the more vehicles that they find, the more recent the vehicles were made. So by no means, if you're driving a recent model vehicle or a vehicle that's even a decade or longer old, it could be vulnerable.
So John, kind of on a brighter note here, or something exciting if you're an auto guy like yourself, what do you think of this announcement between Google and Fiat Chrysler teaming up to get a driverless car by the end of the decade? Is it doable? What does it say about the industry?
Well, it's a step. I mean, Google, I think, would want to work with bigger automakers than Fiat Chrysler. Fiat Chrysler with 4 million units is a drop in the bucket compared to a General Motors or a Volkswagen or a Toyota or even Ford Motor Company. But it is a step in a direction. On the surface, this is Fiat Chrysler somehow getting their products in the hands of Google so that Google can use them testing on open roads. And so what's important here is that Google gets to expand its fleet. Fiat Chrysler gets a little bit of the PR value, and maybe down the road the two can work together. The end game here for Google obviously is supplying or building a car, but in the interim is supplying the brains of the car that will allow it to move down the road autonomously. A lot of this work can be done. Google is by most indicators, far out in front of most of the automakers when it comes to understanding how to get cars to do that. Now it's finding more automakers, not just Fiat Chrysler,
hey, John,
but more automakers who want to work with them.
I hate to cut you off, hate to speak over you. We're watching a crazy market today, so we're going to have some earnings after the bell. Tesla's down over 4%. We know there are a lot of cancellations to the mass market car, mass market model. What's going on over here with Tesla in particular?
Yeah, I mean, the mass market car is one of the two big questions for the day. The biggest short-term question is whether they can stanch the cash burn that threatens to force them to go back to the markets and get more money to keep the company afloat until they can get the Model 3 on the road. They're trying to fund big capital investments, plant expansions, building a battery plant in Nevada. And then eventually, if they can ramp up fast enough to get to this Model 3, which is a more affordable electric car, they may be able to improve top-line growth. But that is still, at least a year away until they can do that. So the short-term focus is, have they come closer to slowing the losses and reversing the cash burn?
And I can tell you my sources on the floor of the stock exchange are telling me that Tesla is pricing in $10 worth of implied volatility or movement, either up or down, in the wake of its earnings report. So
for sure. Yep.
Highly watched, very volatile stock. John Stoll, thank you so much.
Very typical. You bet.
Okay.